Well, let's get to the man himself, Greg Engel, the boss of OrganiGram. Greg, thanks very much indeed for joining us. Just talk to us about the quarter, the profitability disappointing investors.
Yeah, I think there's a couple key. I mean, this was a transition quarter for us, as David outlined. I think, so three big undertakings for us. One is, launch of our Shred and our value product offering, which, one of the highest demand products. We saw it consistently, for example, on the Ontario Cannabis Site's website as the #1 brand searched in the months of November and December. We didn't have enough of that product, though, to meet the consumer demand. So certainly one of the reasons we're ramping up production. I think the second thing is that we have undergone a portfolio revitalization that's been we've been working on for a number of months, and we've been launching a number of new high THC SKUs. And I think if people listening, watching, want to look on Reddit for some of those SKUs like Black Cherry, ICC, they'll see kind of the response that the consumer has had to those in particular. And our goal going forward is to bring more of those high THC, higher margin products to market. And the third thing, as David alluded to, is certainly automation, a focus for us not only on pre-roll production, but in other areas, continuing to ramp up not only staffing, but improvements in terms of process downstream.
Now, but we are seeing more and more retail stores in Canada. Why did you sell less cannabis than you did the previous quarter? Just remind us of that.
Yeah, I think part of it was, we had originally gone through some temporary layoffs early in the spring, and those converted to permanent layoffs in the summer. As we had existing inventory, we had looked to move in space, so we'd reduced our cultivation. But what we saw is the shift in demand, right? Consumers are looking for more high THC product, and certainly we did not have enough of that. So again, that was our genetic program that's underway. So we just were not able to bring enough of that product to market in the time frame that was required to meet the demand, and that's why we're going through a process currently to add up to 130 staff right now, 100 in cultivation and 30 in packaging and processing. Puts us in a better position for Q3 and beyond.
Profitability, consistent profitability, has proved elusive for OrganiGram. When do you hope to fix that?
We don't like to give forward guidance in terms of when we'll meet that point. I think one of the key things that investors should look at is we did have a positive cash flow from operations in this quarter of $300,000. 2 quarters ago, we also had positive cash flow from operations. So, certainly while we're not operating at full efficiency and there's some overhead considerations relative to that, relative to the product we are producing and selling, we're doing it in a positive manner, and that's one of the important things on a go-forward basis.
Now, just remind us, David referred to this, you've brought in Marnie Weishofer, I hope I have the pronunciation right there, formerly with Lionsgate. What's her expertise? What would she bring as a director? What would she bring to the company?
Yeah, Marnie Weishofer is a great addition she's got extensive governance experience, been and served on multiple boards, proven experience both in the M&A and the finance world, and certainly our first U.S. domiciled board member. So we're excited to have Marnie join the board. And I think for us, having that proven experience on kind of M&A is important as we look at opportunities. We've always continued to look at opportunities, but really having someone on the board that can bring both the financial kind of aspects to it and the proven experience in M&A is really important right now.
You still haven't really made a foray into the States, and obviously a lot of investors think that's where the real growth is going to be. That's got to be a knock against you that you haven't found the right formula yet.
Well, I think one of our things that we're focused on is we spent a lot of time over the last couple of years at looking at possible CBD entry points and just haven't found the right way to do that. We've had discussions with numerous consumer packaged goods companies in the past on possible, ways to enter with them in partnership, and just nothing has come to fruition. I think, our focus right now is developing innovative technologies and platforms and products like our Edison Remix dried powder formulation, which we believe, it's about having those innovative products that you can bring to market, whether or not that's directly ourselves or through a licensing deal with a partner in other jurisdictions like the U.S. And, look, we are going to see movement in the U.S., but it's still hard to predict when that's going to be at this point, Andy.
Just, I mean, the cannabis stocks, maybe we'll put up a 3 or a 1 year chart. As you know, they surged amid euphoria around the time of legalization. Investors threw billions at the sector. There was massive spending. There have since in the industry been huge write-downs. What have the lessons learned been?
Well, I think it's interesting, right? We're bucking the trend versus many of our competitors. As you said, you've seen numerous companies been shuttering facilities, taking write-downs on those facilities, closing multiple facilities. We're actually going in the opposite direction right now. We're adding staff because the demand is there. We know our products, and it's one of the differentiators for us as an indoor producer. There is high demand for quality indoor product, and so certainly I think we're well positioned for that opportunity as we see more stores opening, not only here in Ontario, but across the country. And the market continues to grow, and that's the exciting thing for us.
Now, you had to lay people off. Are you looking for new people? And what kind of wages do you pay?
Yeah, so there's a broad range here, right? So we're paying, so we have been able to bring back some of the staff that have been laid off, which is a positive thing for Moncton and New Brunswick. We've also been looking for new staff, and again, the wage range is very dependent upon the position. We have everything from, people in areas like cultivation and packaging that are paid in the $18 to $20 range, and then we have as a starting salary, and then we have people that are PhD researchers that are paid certainly higher salaries than that, and it's a pretty broad range in terms of staffing.
And just remind, excuse me, next time you come on, we'll have to get some footage of that machine. Is that right? It can roll 40 joints every 60 seconds?
Yeah, so we're not through final commissioning, but all of our testing that we've been doing on this pre-roll equipment is that we can get between 40 and 50 joints per minute. What we're working on is just finding the right blend that works consistently with it, and we're excited about that. It would allow us to reduce, a labor group of 22 to reallocate those people elsewhere and have 3 people operating in the machine with a much higher throughput. And, as we go forward, we're looking to also change our SKU mix to not only offer singles and 3-packs, but larger size offerings as well in terms of multi-packs. And that's where the consumer demand is right now. So really excited about that automation as well as other projects.
Greg, thank you very much indeed. Greg Engel, the CEO of OrganiGram.